Hello traders, hello everyone. It's Monday, August 26th, so hope everyone is doing well. Headed to a new trading week. As you know, today is holiday in the UK, so the market was actually a bit slow. However, we got some very interesting and strong dollar moves last week. As you know, finally we got Powell speech in Jackson's Hole, and he actually confirmed what market anticipated. They will be looking to cut rates over the next few months, and of course, as a result, dollar has seen a very nice and strong decline. Now I will begin with the US yield. As you can see here, we have seen a pretty nice move to the downside, and I still think that actually there can be a bit of more weakness over the next few weeks, maybe even till the till the end of the year. And what I really like so far is that dollar is breaking down. Okay, it has seen, as you know, some very extended nice moves lower last week, but US yields somehow are stable here. So I still think that whenever US yields are going to see more weakness, that's when dollar will extend even below 100. And at the same time, what we would be expecting obviously is stocks, the S&P 500 in particular, will move to new all-time highs. I really like the idea that actually stocks somehow are sideways for now. Okay, so if maybe we get some rally in the near term here on dollar index, let me go to the 4-hour time frame. So if we get some kind of a rally here on dollar index in the near term, this could possibly allow stocks which are sideways for now could possibly see a slightly lower pullbacks and even better levels for some to potentially join the uptrend. So I think that this risk on mode is clearly in the cards here, and it may even resume even higher because, as I said, they're looking to cut rates. Inflation is coming down, but they're, as Paul noted, the primary task for them will be to keep the job market stable. Okay, so if you will see, they won't allow job market or unemployment to drop significantly. So they certainly will be looking to cut rates to support the job market and economy as a whole, and this could keep obviously dollar in downtrend here. So if we get some kind of a rally here on dollar index, then maybe watch other currencies at the same time. Obviously, there is a very strong support if you look back at December 2023 level. So we also have these five subwaves down from August 08. So maybe there is going to be some recovery, and if we'll get a recovery, those pullbacks will also be visible on other pairs, and this may allow you to maybe to look for potential trades after this pullback, because obviously there is some very extended drop and oversold conditions could potentially trigger some stabilization. Okay, we don't know if this will happen exactly from here or even lower, but definitely whenever we see a retracement for this wave 4, which should be somewhere around 23.6 or 38.2% of wave 3, that's when we may continue to expect another turn to the downside. Also, since I mentioned stocks, maybe if you look at this chart, okay, this is quite interesting. We have here Nasdaq 100, then we have Dow and also Russell. I don't know where the S&P 500 is. Let me just okay, so you can clearly see here that all of the markets, our indexes obviously are moving in the same direction, and this is quite significant and important because if you look back, okay, and maybe compare the current rise with, let's say, with the cycle here back in May. Well, we have seen back then S&P 500 moving to the upside, Nasdaq 100 as well, but somehow Dow and Russell, okay, were consolidating. Okay, they were lagging, but now what we are seeing in this current phase, well, we are seeing, let me just, someone is saying that voice is coming less, so it looks like that. Just a second. Okay, it's now better. Yeah, I will not scream here. I just moved my microphone a little bit closer, so let me know if now it's better, please. So what we are actually seeing here, someone is saying that sound is okay in some other chat, so make sure to check at your site. Maybe great here. Thank you, Tim. Okay, so what's in this current cycle, what's important is that we even have these small caps Russell index showing us a very nice healthy recovery. So that's definitely something you want to see in the risk on environment. Not that just one or few sectors will do well, but that we have these other major indexes also showing us the same picture. So certainly I'm expecting much more of the gains, but as I said, maybe there can be some pullbacks that we should observe and watch levels, potential levels to join the uptrend. I like still these levels for a wave 4 a little bit lower, and as I said, if dollar is really going to stabilize a bit, let's say for the start of the week, for the next let's say 3 days or so, 2 days, then maybe the S&P 500 will still come back to these lower support levels here, around 5,570, maybe even 20-30 points lower. So this whole area could be very attractive to join the uptrend, because I certainly think that sooner or later we will see a new high. Also, I don't know if I have it here. Here's the S&P 500 cash market. Let me go back to the 4-hour. Okay, you can see that on the cash market we have some gap here. Okay, that is still unfilled, and it's actually right at the highs. Those gaps obviously not always will be filled, but there will be a lot of examples where you will see gaps, and then at some point those gaps, even in cash market, will tend to be filled. And this was a very nice, example and resistance was here back at the start of August, when we got this, I think it was non-farm payrolls report, exactly when we filled this gap, and then market turned to the downside. And now again, we still have this open gap here at the high. So I'm thinking that until this gap is filled, that we can expect more upside, and just look for any dips as a just temporary till these levels are reached here. So whenever we are going to see new highs, that's when we should be a little bit more careful and aware of new pullbacks. Now, if we take a look also maybe on the euro dollar, this one is making some very nice breakouts. Let me just change templates here. So you can see that we actually broke above, quite significantly above, this December 2023 highs. Now this could maybe on the next pullback could be a very nice potential support. If you will go to the smaller time frame, you will actually see that there is also the support of a previous fourth wave around that area as well, or maybe 30-40 pips lower. So this whole zone here around 1.11, I think it's very attractive, very interesting for potential further upside, because clearly if we completed the triangle here, or even just some kind of a lower degree correction down here on August 1st, well, from that level you still need 5 waves up. Okay, and I think on Thursday I even shared this free video analysis for euro dollar, and I said that as long as we are above 1.10, there is a chance to join this trend, and I still think that's the case because we don't see 5 waves up. Okay, because whenever you want to see maybe some very strong resistance to be seen, you need to have these 5 waves up. Okay, because only 5 waves up will suggest that we are most likely moving into some very late stages, but for now that's still not the case. So after next pullback, watch out this way for it should not drop below 1.10. If this happens, then again, unfortunately, euro dollar will just stay trapped in this very, very big range. But I think that we are rather going to see this highs taken out here from July of 2023. Cable, now pound is doing very well. It's also breaking to the upside. We've been analyzing this one last week quite closely. We were tracking this impulsive rise, and this one is still ongoing. So I think that this current break that appears to be like very, very nice, strong and extended. We even, as you can see, trading out of this base channel, which is normal for a wave 3. So if you see a pullback, I think that again this will be temporary and that we are going to see even more upside. Let me check where is the high here, okay, to see if maybe we have this previous swing high as a potential support. Well, very nice actually. So you can see that was the previous high at 131.40. So if we see pullback to this area, this could be a very attractive for a new potential bounce. Now here's also Aussie. Aussie is very strong. Before we go maybe to the wave counts, you can see that even now Hang Seng Index is trying to break out of this downward channel. So I'm thinking that this obviously is positive for Aussie. Also RBI is most likely looking to stay on hold with the current rate, so that's definitely something that keeps Aussie very strong. But we will get the CPI, the inflation data, on Wednesday from Australia. Expectations are 3.4, down from 3.8. Okay, so that's, I mean, low expectations here. Prices could soften a lot, but if there will be a miss of these expectations, then Aussie could definitely stay here very, very strong. But certainly we are seeing maybe some temporary resistance here. Notice that market erased all of the losses here, going back from July to August lows. So clearly that's now important resistance. Even if that's a triangle, obviously you should expect wave E retracement. Let me show you this on a daily chart here. Okay, some kind of a wave E retracement, but keep in mind that that's a very strong, very extended fast lag, I must say. Okay, so clearly this could also be treated as an impulse. But even if that's an impulse, like a waves 1, 2, 3, 4, 5, again, you should be aware of some pullback. So if someone wants to join this Aussie trend, I prefer to wait on an ABC setback. There will be pullbacks. There are always pullbacks. Of course, it's not always easy to say from where exactly, but certainly you should keep an eye on the structures. Okay, if we see an ABC structure to the downside, then certainly I think that there will be a chance to join the uptrend. If let's say that inflation figures in Australia will come down below 3.4, okay, that prices will soften a lot, then what I would watch is Aussie versus Kiwi, because this one, keep in mind that New Zealand, okay, in New Zealand they already cut rates. I think it was back on August 14 for 25 basis points from 5.5 down to 5.25%. But still, New Zealand dollar is doing quite well, much better than Aussie. So if suddenly inflation in Australia will soften a lot, then I think that this will keep Aussie versus New Zealand dollar in downtrend, because maybe let's say that we get 3.2 or something like that, then maybe RBI will maybe continue to cut rates, and this then of course will make Aussie versus Kiwi even more bearish. So certainly from an Elliott wave perspective, it's very beautiful wave pattern actually. That's an impulse triangle, and that's another impulse that stopped at the 61.8% at new swing high, and now we are coming down quite aggressively. So thinking about more weakness here. If you will draw this channel or potential bearish flag formation, you can clearly see that we are already trying to break out here. So watch this pair this week. I think it can provide definitely some very interesting moves to the downside, especially if Aussie versus US dollar is also at that resistance. Dollar CAD, this one is also finally actually moving. It's been quite not that attractive to me over the last few months, I must say. But now we are seeing some very nice strong moves. We are seeing dollar CAD coming down clearly in impulsive sequence. Notice that we have some very nice extended leg here, and even in the potential fifth wave we have some very strong sell-off. So I certainly think that after the next rallies there will be more weakness. Maybe we'll just continue straight to the downside within wave 3, targeting even lower prices. But if we manage to get some pullbacks, then certainly there will be opportunity to join this trend. Even crude oil is once again coming to the upside from the lower side of the range. As you know, I've been warning about potential breakdown last week. Then on Friday we haven't seen any kind of a weekly or daily closes that would confirm this breakdown. So it looks like that we are still now trapped in the range. It's crude oil that comes to the upside because of geopolitical tensions, but we'll see if demand will be strong. This certainly still, in my opinion, looks like a bearish pattern, and I think that we could be rallying now maybe for a more complex either wave E, okay, or possibly you are already in a wave 2. So I think that still later this year that crude oil will see a move to the downside, but at this point, since end of last week when crude oil turned to the upside, well, that's certainly some positive signal for commodity currencies or for Canadian dollar in general. So for now, that's definitely the correlation that we should observe. And if crude oil will continue to see some very nice and strong extended gains in the next few days, then watch out for stronger CAD versus the US dollar. Looking at the dollar yen, we have seen some sell-off last week, but this sell-off most likely came just because of a weak dollar rather than strong Japanese yen. There's still a risk-on environment, so as I said before, maybe it's not the perfect time now to be short dollar yen. I think that there are just much better currencies out there for potential dollar shorts now when you have stocks in the risk on mode. So I'm not sure if really we will see any strong break to the downside. I still see this as a very strong support here around 140. Okay, this could potentially limit the weakness for wave A, and then we rally for wave B. Now to get a full perspective maybe for yen watch yen crosses, and then you will see exactly in which direction, maybe general direction yen is headed. But for now, I just think that sell-off at the end of last week and now today is just more linked to weak dollar. Looking at German DAX, also very nice, very beautiful rebound here. Daily chart clearly completed this fourth wave, and now we are headed back to all-time highs, I believe. Once again, there's a healthy uptrend, should be structured by 5 waves before this market can come to an end. So clearly just be aware of more upside, even if we see some breakdowns here in the short term and broken channel. This will be only temporary, I believe. Looking at silver, finally it managed to recover. I think that we have some very nice beautiful impulse from the lows. It can either be already impulse in late stages, or you will see much more extended lag. And I think that it's more appropriate to be prepared to more an extended lag rather than wait on the next deep retracement and then you will never get it. But I just think that whenever we see pullbacks structured by 3 waves, this can be opportunity to join this trend. This previous bullish level was broken quite nicely at 29.20. Also, we have seen some dips only short term, and then Powell, as you know, sent these markets higher because of a weak dollar, and I think that this current trend will actually stay in play. Clearly, the drop from that May highs has been corrective, and that's why I think that it's appropriate to stay with the bullish count here. Also, watch the RSI. We have some divergence, so that's why maybe in the short term we can see some short-term pullback. And if suddenly we get 29.22, I think that this could be the next potential support. Now let me check my list here. By the way, just give me your reminder if you're first time visitors and you want to see more of these analysis on a daily basis, then make sure to check our website wavetraders.com. We also have free 7-day access, so it means that you can test our services for 7 days for free. Okay, now let's take a look some of stocks. What's the most important for this week? It's going to be nvidia earnings. Okay, I think it's on Tuesday after close. Let me check. Actually, it's on Wednesday after close, and as you know, earnings have been from nvidia played a very important role, not only for the stock itself, but for major global indexes, you know, and especially if earnings would be strong, this in my opinion will send S&P 500, Nasdaq 100 even easier back to this close to the all-time highs. And if we consider this Elliott wave structure, clearly that was a very nice and deep ABC pullback. We filled this gap and now we are turning bullish. So I think that this strong push in the middle of the current rise just confirms that impulse is still in the game, and this, as you know, has a positive impact on cryptos as well. Now cryptocurrencies broke to the upside recently, and I think that if nvidia earnings will keep this stock in uptrend, then obviously this will keep or make even more upside potential on cryptos as well. So nvidia, from in Elliott wave terms, notice that we have seen some pullback. It stopped at this trend line, perfect technical reaction actually, and now looks like that we will see prices higher, because in pre-markets you can see that we are already, I believe, above wave 3. So watch out for more upside here, but definitely you don't want to be or don't want to have too much of exposure ahead of earnings on Wednesday. If we look at Meta, this one I believe touched new high, as I checked earlier when I was updating charts for this webinar. Last week we touched the high, we came slightly to the downside, but nothing to worry about. Still, that was a very nice triangle. Firstly, I thought that maybe triangle could be a bit more complex, but this spike here down after earnings on August 05 actually perfectly completed this triangle. We broke higher, and maybe now we retest this same line as a support. So watch out for 520, 530, maybe 20. Yes, because we are already lower in pre-market. Maybe 520 or 10 as a very nice potential support for this week. I definitely think that much more upside here is in the cards, and you clearly want to stay with this uptrend rather than fight it. So this fifth wave, in my opinion, he still has slightly higher targets available. Let's take a look on PayPal. It's been some time since I covered PayPal, but a few months back I was tracking it regularly, but because market was just some kind of a sideways, and very noisy, I just didn't want to touch it much. But now we are suddenly seeing some very nice moves after earnings here from start of August, and you can see that actually prices were now finally back to this unfilled gap that is now filled actually. I highlighted this as a potential upward projection a few months back, because normally these gaps will tend to be filled, and even more upside could be seen if we really, or stock market in general, will stay in uptrend. Then maybe PayPal can break 76. Even head and shoulders bottom formation would be valid then, and potential breakout, as you know, could open much higher targets here. Even if we see some temporary reaction higher here, you still need to have 5 subwaves from that July lows, and In such case, you are now in a third leg here. Okay, let's take a look also on Tesla. Tesla also still it's in a triangle as we discussed last time, but even if we are going to see lower prices for wave E, at least in the short term, I think that this unfilled gap here from earnings on July still can be filled. So watch out for more upside, maybe in the next few days. Looking at AMD as well, I really like the price action. This one clearly that was a free wave drop, but as I said and discussed already last time, even if market will stay sideways for a longer period, okay, what you would expect is that more upside will be seen at least for a free wave structure, because even if that would be correction, okay, like an ABC, well, it's still ongoing recovery then, because wave B is missing, wave C is missing, and you have this unfilled gap as well around 177. So I think that this one also shows very beautiful picture, bullish picture, even if just short term, and this can keep cryptos in uptrend. And if you look at semiconductors here as well, I just think that even if that would be a wave B rise, again, just temporary rise back to this unfilled gap from July 17, there's still room to recover further, because that's an impulse. So after the pullback, I would be expecting more upside here, even if not to new all-time highs. In the short term, I just think that buy the dip scenario is still in the game here, and this, as I said, could potentially keep us bullish on cryptocurrencies. If we just look at total market cap first, and already as we discussed last time, we said that this strong rise after this spike, and because of how dollar was looking at the time, how stocks reacted, I thought that this obviously is correction that will sooner or later take us higher. And we can see some very nice push to the upside so far, and I think that there is room for more upside. Maybe there is now just small consolidation on the way up, so watch out maybe 2.9 trillion or so, or 9 trillions or so. As long as we are above that level, we could continue to reach more upside. Break below that level, unfortunately, will keep markets a bit tricky, and most likely more complex correction. But for now, the short-term picture is bullish. Long-term picture obviously is also very bullish. Looking at Bitcoin itself, we have some resistance here, maybe in the short term around 65,000, but real important level should be still a little bit higher. As you know, last time we discussed about these liquidation levels. Let me check how it looks right now. There's still, despite higher swing low here, okay, we are not seeing much of the stops here at the low. So it looks like that market is not positioned for that much to the long side, okay. But on the other hand, you still have a lot of stops here at the high. So it looks like that there are plenty of traders who, especially speculators, who are short this market. So it looks like that market wants to clear them out before we may potentially see some pullback. So 70,000, and that's the high around 72,000. I think that this could be like a next magnet for the next few weeks. Also, maybe give you just a fresh update here on Solana, because we covered this one as well last time. Still, we have some very nice, beautiful ongoing bullish pattern here, because market made free waves from the highs. That's a correction. It means it's part of a broader uptrend, and looks like that we can be on the bridge of the potential break higher here. There's some resistance around 163, but possibly we are going to see a break into the third leg. So if we think that the whole correction here in a wave 4 is completed, then there's a big upside potential, okay. So I certainly think that sooner or later we will see again move toward closer to 200 area, okay. Okay, traders, I hope that you enjoyed this webinar. Just before I go, let me check the chat box here. Can you please something about commodities and emerging markets? Well, commodities in general, I have charts here, by the way. Commodities in general, I think that there can actually see a bit of more upside, especially if dollar will continue to the downside. So this is something, this correlation is something that we have to keep in mind, that obviously if dollar gets weaker, everything else gets much more expensive. And if we look here on this commodity index, which is actually fund, more equal weighted, you can actually see that that's some kind of a bullish pattern here. Okay, let me go to the daily chart. It looks like that here we have, let me remind this, we have possibly 5 waves up followed by a deep correction. So I'm thinking about more upside here, and this certainly could be maybe just some very strong temporary reaction higher will follow, especially if dollar will see significant strong push break to the downside, which certainly is possible. But at some point, even dollar, if we'll see some very extended leg to the downside, would be able to stabilize. But for now, I certainly think that it's very important for commodities to be aware of higher prices on commodities, at least short term, if dollar will stay weak. But we'll see what this will mean for the inflation going forward, looking, let's say, in a year from now, if commodities would really be strong, what this means for inflation. Well, we know that maybe we again will stabilize pretty quickly. Omid said that AMD my favorite and only super from I hope it will get a pullback to buy a little bit. Yes, AMD looks very, very nice and very attractive. Regarding markets in general, then, as you know, dollar is selling off. Watch out, be aware of pullbacks, but then more risk on flows, in my opinion, are in the cards. Now, when these whole cycles may end, well, you should be very careful as soon as the S&P 500, NASDAQ 100, all of those major indexes will move to new highs, and especially when dollar index breaks towards 99 and clears this low from July. Whenever we are at that levels across these different assets, that's when we should be very careful and be aware that maybe something is going to change. Okay, but still there is a plenty of time and room left till these cycles come to an end. We have Fed that firstly have to cut rates. Okay, that's the first thing. Then you have also elections. So I still think that this year looks quite good, but just, you know, nothing moves just in straight line. Traders, thank you very much once again for your attention. So if you're a first-time visitor on YouTube, make sure to subscribe to our channel, press a like button, support us, put your notification on, and also make sure to visit us at wavetraders.com, where we cover a lot of markets on a daily basis for our members. Traders, have a good day and talk to you soon.